Hello and welcome to this small presentation on Tamilnad Mercantile Bank IPO. Tamilnad Mercantile Bank IPO comes in quick succession to Sirma IPO and Dream Folks IPO. I could not write on Dream Folks IPO due to some medical exigencies. Tamilnad Mercantile Bank is a 101-year-old bank and is now going to enter a new phase of growth with this about 830 crore IPO. The issue opens on 5th September and closes on 7th September. The issue size is at the upper end 832 crore. Bid lot is 28 shares. Price band is 500 to 525 rupees. 75% of the issue is reserved for QIBs and only 10% is reserved for retail. 10% for retail is not that the bank is not profitable. It has been profitable in all the 3 years, but there are some issues related to its tangible assets, due to which only 10% is being offered to retail. About 0.57 lakh applications are required for one-time subscription of the retail quota, and one can expect that retail quota, despite several issues, will be subscribed. Tamilnad Mercantile Bank is one of the oldest private sector banks headquartered at Thoothukudi or Tuticorin, Tamil Nadu. It started as Mother Bank in 1921 and was basically a bank which was catering to a particular community. Later on, it was realized that it can serve its purpose better by catering to all communities, and so the name of the bank was changed in 1962, though the Nadar community is closely associated with this bank. The bank has a network of 509 branches, 12 administrative offices, 1100 ATMs, 282 cash recycler machines, and 101 e-lobbies. Out of these 509 branches, many branches are in semi-urban or rural areas, majority of branches. The bank has a wide presence in South India, and 75% is in the state of Tamil Nadu, though it has some 90 branches located in states of Maharashtra, Gujarat, Karnataka, and Andhra Pradesh as well. It has about 5 million customers, and 80% of the customers have been associated with the bank for a period of more than 5 years. Tamilnad Mercantile Bank raised 364 crores from 21 anchor investors, but these have been mostly insurance companies and some foreign investors like Nomura. Mutual funds have been absent in this issue for reasons which are not clear, and it's rather off the way that the anchor investor allotment has been carried out at rupees 510, whereas the price band of the IPO is rupees 500 to 525. However, if the discovered price in the IPO is 525, the anchor investors will also have to pay the same. The largest stake has been taken by Bajaj Allianz Life Insurance Company, and Max Life Insurance Company, through its various schemes, has also taken considerable stake in the company. If we look at Tamil Nadu Mercantile Bank's operational metrics, the bank has been doing well. Its business has grown over the years, despite the fact that it was not allowed to open new branches by RBI due to a dictate on account of certain issues in the past on which RBI had raised objections. Deposits have also grown over the last 3 years. Credit to deposit ratio is also good at about 75%. Cost of deposits has been coming down. The bank's net advances have increased. Operating profits have also seen a good jump, so has the net profit, and the bank has been profitable in all the last 3 years. Return on assets has improved considerably to 1.67%, and return of equity has also shown an increasing trend. The ratio of current accounts and saving accounts to total deposits now stands at about 30.5% and has grown over the last 3 years. The cost to income ratio has also been coming down. So the operational metrics of Tamil Nadu Mercantile Bank look fine, and the bank seems to be well managed. If we look at the financials of the bank, its interest income has grown over the last 3 years. Its net interest income has also shown growth, due to which its profit before tax has shown a healthy growth. It has almost doubled in this period, in the last 3 years. The bank is being offered at a price to adjusted book value of 1.52, which looks reasonable. PE is about 10.1, and the market cap will be about 8,300 crore. Some salient points about TMB. TMB has a customer base of 5 million plus. 80% of the customers have been with the bank for 5 years or longer, and they account for considerable amount of deposits to the bank as well as for the advances. The loan book of the bank is mainly in 3 areas: retail, agri, and MSME. The bank is shying away from corporate customers and is focusing on these 3 areas, which is also known as RAM, which stands for retail, agri, and MSME. MSME accounts for 37%, agri loans 29%, and retail loans about 20%. Majority of the agri loans are gold backed, means there is a guarantee in form of gold with the bank. Gold loan book of the bank is about 85 billion. Bank has also started giving e-loans, which have shown a healthy growth. These loans are given in small ticket size. Tamil Nadu accounts for 76% of the loan book of the bank. TMB Bank has been involved in many controversies. In fact, for the last 3 decades, it has been in the news for one or other wrong reason. The one case which is still haunting the bank involves its share transfer, for which permission was obtained from RBI for transfer to 3 NRIs, but the bank went on to transfer this year to 7 NRI individuals, which were different from the permission obtained from the 3, and thus it involved both SEMA violations as well as a violation of RBI mandate. Further, the bank issued bonus shares in ratio of 1:500, and as a result, considerable amount, about 38% of the paid-up equity share capital, is subject to outstanding legal proceedings, and there could be adverse judgments on this account. Due to this, RBI already imposed some penalties on the bank amounting to about 10 crores and all. But further developments in this regard cannot be ruled out. In the 90s, the rulers of Isar made an abortive attempt to take the bank, and they cornered about 2/3 of the bank shares. But there was considerable opposition from the Nadar community. The Sterling Group also came into picture, and ultimately this takeover could not happen because RBI came with the rule that industrial houses cannot run banks. So all these shares, they were returned back to the shareholders, and the Nadar community played a major role in retrieving the bank from Isar Group. Now, question arises, should one subscribe to this IPO despite such a controversy? We'll examine this in next slide. Concerns about the bank range from regional concentration in Tamil Nadu, which accounts for about 2/3, 3/4 of its advances as well as deposits. Legal matters, which can have an adverse impact, and they are no small as they pertain to 38% shareholding, which if becomes disputed or has to be sold for some reason or transferred could pose a problem. Also, prospective investors will need prior RBI approval to be able to acquire more than 5% share capital of the bank. If we compare with peers, TMB comes with flying colors, if not at the top, but certainly it is at the upper quartile. This can be seen whether its P is 9.1, whereas median P is higher. Its profit to its price to book value ratio is at 1.4. This also is lower than the quartile. Return on net worth is healthy at 15.4%. Return of assets is also more than the median return of assets of its peer group. Its gross net performing assets are also under control compared to other banks. So, compared to peers, the performance of the bank on these parameters look good. So, look at the return ratio. If look at the key figures and ratios of the bank, return ratios have improved, and now ROA, return on assets, stands at 1.66%, and return on equity stands at 16.6%, which is good compared to other banks. Net NPA ratio is down to 0.96%. Provision coverage ratio, including write-offs, is 88%. Restructured book is 2.84% of the loan book. Operating expenses is 42%, which are down from 46%. Share of digital transactions has been going up and now stand at 85%, up from 75%. Net interest margin has improved to 4.1% from 3.64%. Management has given guidance and NIM will range in 3.85 to 4%. Miscellaneous income also has rose on back of recoveries from written off accounts. Capital adequacy of the bank will rise from 22% to 25% due to IPO proceeds. So, bank seems to be reasonably well placed. Tamilnad Mercantile Bank has shown a healthy financial performance. It's healthier than other private peers, which are older banks like Federal Bank, Catholic Syrian Bank, etc. It has diversified loan book. It has maintained a strong asset quality. The bank has a strong legacy. Its customers are loyal. They have been with the bank for many years. The base is good. But it is focusing on improving its service framework. For the period 20 to 22, TMB deposits have increased with a compounded annual growth of 10.46% compared to peer median of 7.9%. Advances have increased at a compounded annual growth rate of about 10% compared to peer median of 8%. CASA deposits have also shown a good trend, and the ratio stands at 30.5%. Net profits have increased at a compounded annual growth rate of 42%. The bank did well during the COVID pandemic as well. Credit costs stand at 0.27%, and return on asset is 1.66%, whereas the peer median is only 0.8%. Thus, the bank is well poised against its peers and has shown a reasonable performance in the last 3 years. The concern about the bank has been that anchor allocation took place at a lower price of rupees 510. Also, mutual funds have been absent. The anchor book has been largely subscribed by insurance companies. So, this needs to be watched, why such a things happen and why anchor investors have not subscribed at the higher end of the price range. There are various pending legal issues regarding the bank's share capital, which continue to be hangover. In the past, RBI has imposed about 10 crores penalty for violations in share allotment and imposed some restrictions on the bank. I hope these will not be very high in future, and this is more now a legacy issue and has been taken care of. But there can be issues like if the share transfers are held invalid and the individuals who are holding these shares have to sell these shares, then there could be some liquidity, and there could be excess shares in the market or things like that. Presently, the bank is not allowed to open new branches, but RBI had stated that it will review this after the listing of post this IPO. The CEO who had joined this bank for 3 years in 2017 and later agreed for a further 3-year extension is departing. He said he is departing on his own and wants someone else to lead the next phase of growth of the bank. So otherwise, bank performance and base looks good and offers that reasonable valuations. And the hangover primarily rises from the things that have happened in the past and can cast still a shadow on the bank. So I am positive on the bank, but I'm not sure, very sure, how the market is going to perceive the bank because there are many opportunities available and there are certainly some issues with the bank. So I would apply on day 3 only if there's a good QIB response to the IPO. So to sum up, Tamilnad Mercantile Bank IPO apply or not, risk is moderate to low, expected reward is low profit or low loss, listing gains are possible but very low numbers, current GMP is 5 to 10 or almost nil. At one time it stood at 20 to 30 rupees, but after the anchor book fiasco, it has slid down considerably. It's a hold for medium or long term. I think the bank will do well over the long run, though there are legal concerns, legal overhangs. Subscription, I'm expecting a moderate subscription to the bank. Retail portion is anyway very small and it will get subscribed easily. I will apply on day 3, looking after QAV response. Above are my views. Please own diligence. Thank you. Read this disclaimer. This video is only for educational purposes, and it's very difficult to predict whether one can make listing gains or even gains in the short term in the IPO because it is more driven by speculation in the beginning, and later on the prices are determined by the results.